All right, welcome back to another episode of the Black Bullion Show. If you've ever worked in landscaping, then you will understand how important environment is to the health of your crops. Well, the Fed just built the best environment in the world for a crop called gold. Now, before we get into that, if you're new to this channel, please hit the big red subscribe button right down below. Also, please hit the like button. It helps to get this economic evangelism right on out there to the masses. Okay, so for the next 2 years, the Fed projects a 0% interest rate environment. This projection times up perfectly with the CBO's projection of significant economic contraction. Now, this is from the Wall Street Journal here. We will be playing economic catch up for the next 10 years because of this crisis. And we're not even out of the woods yet, in my opinion. GDP will be reduced by 3% until 2030. And it's just insane to me for people to say that we're not completely out of the woods yet. And I often think, okay, well, if this is the case, where will we be in the future? Well, Niels Christensen of Kitco News asked that same question. Where will we be in 2 years? And I think we all have an answer. Now, allow me to be the spokesperson for all of us gold bugs here on my very small YouTube soapbox. But I see higher gold prices. The dollar is weakening, and it will take more of them to buy an ounce of gold, obviously. But how much gold should we have? That's answered later in this article in a quote here that I'll read. Of course, it won't be a straight line. You will have bouts of profit taking, as you would expect, as well as investors buying into momentum. I think it will comfortably break through $1,800 an ounce, said Philip Newman, director and a founding partner with a London-based consultancy firm. With gold prices going up, the critical question some investors are starting to ask is, how much gold should I hold? Tim Schaller, chief economist at I Trust Capital, said that generally 10% of a portfolio should be in gold. At 10% allocation to gold makes a lot of sense because gold has a very low correlation to the overall stock market and to the overall bond market, and how portfolios decrease risk at a given return expectation, he said. 10% is enough to create a correlation factor within your portfolio. But it's not so high that it introduces new risk caused by fluctuations in the gold market itself. Now, in my opinion, you guys have seen my asset allocation at the moment. And I say at the moment because I'm never stagnant when it comes to my allocation. But I have over 20% of my asset allocation in gold. And honestly, I plan on keeping it that way for some time. And, it may even increase if I don't have much need for liquidity. Knock on wood, hopefully I don't get fired, get the axe. But, let's say if things still look good for me on the job front of things, I'm going to keep stacking metals. And one of my goals, honestly, is to have about 10 ounces of gold by 2021. Right now, I'm a little bit behind. I'm at 3 ounces and a quarter. Where are you guys in your stacking or in your stack for gold? Let me know if you have a deadline, an outline of how much you are planning on stacking, and when you hope to hit that goal. Let me know in the comments section below. Thanks again for watching. Please hit the like button. Also subscribe. It's Black Bullion.